এই শুনছিস,
কি?
একটা ভালো খবর আছে।
হ্যাঁ, বল।
ওই যে সুমনা দিদি আর সুমনা দিদির যে ছেলে বিবেক, ও তো মতিলাল অসওয়ালে কাজ করে। ও না আমাকে ঘরে বসে বসে বিনা হার্ড ওয়ার্কে ইনকাম করার বুদ্ধি দিল।
কি কি বলিস কি রে?
হ্যাঁ, যত টাকা আমি এমনি ইনকাম করি তার থেকে বেশি টাকা আমি এখানে ইনকাম করতে পারবো।
সত্যি? কি করে বল প্লিজ।
আমি ETF এ টাকা ইনভেস্ট করে আমার ইনকাম বাড়াতে পারবো, and which is also very safe and secure. আমি যদি স্টক মার্কেটে টাকাটা ইনভেস্ট করতাম তাহলে তো অনেক রিস্ক থাকতো, কিন্তু এটা তো ETF। তাই বিবেক আমাকে চ্যালেঞ্জ দিয়ে বলল যে ETF এ টাকা ডাবল হতে কেউ আটকাতে পারবে না।
তাই নাকি? আর কি বললো?
আরো বলল যে 18 মাস বা তারও কম সময়ের মধ্যে টাকাটা নাকি ডাবল হয়ে যাবে। তো ভাব না, যে টাকাটা ইনভেস্ট করলাম তার 50% টাকা যদি পেয়ে যাই তো ক্ষতি কি? Have you ever invested in an ETF? Oh, the question should be, what is an ETF? An ETF goes with the full form, Exchange Traded Fund. As the name suggests, it has something to do with stock exchanges like BSE and NSE. An ETF is a type of fund that owns assets like commodities, stocks, futures, etc., but has its ownership divided into shares that are traded on various stock exchanges. In basic terms, an investor can buy and sell an ETF anytime during the trading hours. Like a stock, an ETF has a ticker symbol and a price that changes in real time. Now, you might have a question, why not invest in stocks then in ETFs? So let me give you the answer. The first point is diversification. ETFs are invested in various stocks which are listed in diversified indices. But stock trading is one of a kind where we can buy and pay obligation of each stock only. Another point is volatility. If there is volatility in the market, trading in stock is highly risky. But the risk is much less in case of an ETF where the whole risk is divided into different stocks.
An exchange traded fund or ETF is an investment fund that trades like a stock. ETFs, like other types of funds, pull together money from investors into a basket of different investments, including stocks, bonds, and other securities. By spreading the fund's money into different securities, ETFs can generally provide investors with diversification, which can help balance risk. Let's look at an example of investing in an ETF. Suppose an investor wants to make a diversified investment that is designed to mirror the performance of a major stock index like the S&P 500. After researching different ETFs and finding the one he wants based on his objectives, he purchases shares of it through his broker, just like he would do in an individual stock. Now that he owns shares, the investor has a stake in each of the fund's basket of investments, while only having to purchase one ETF. Participating in the wide market with only a single purchase instead of multiple purchases can save an investor research. So, how can an investor potentially achieve a positive return from the ETF? Similar to a stock, he can earn a return in two ways. Number one, a rising ETF market price. Number two, dividends. Typically, if the value of the ETF's investment increases, so does its price. Of course, if the ETF's price dropped, our investor would have lost money if the position was sold at a lower price. Most mutual funds require a minimum investment which can be substantial. An ETF investor can just buy a single share plus any commissions and fees. Also, because most of ETFs are not actively managed, they typically have lower management fees than mutual funds.
Now, you might have a question, why not invest in stocks then in ETFs? So let me give you the answer. The first point is diversification. ETFs are invested in various stocks which are listed in diversified indices. But stock trading is one of a kind where we can buy and keep obligation of each stock only. Another point is volatility. If there is volatility in the market, trading in stock is highly risky. But the risk is much less in case of an ETF where the whole risk is divided into different stocks. Now there is another very trending investment instrument, that is mutual fund. So why do we invest in ETFs and not in mutual funds? Now I think you have a very clear picture on why ETFs are a better investment instrument than the other previously mentioned investment options. But let me share my investment experience with you all. I bought the Motilal Oswal in 100 ETF at 750, and after 6 months I sold it for 930. So I had a profit of about 25%. So I think this is a very lucrative instrument in terms of profit making and risk taking. So you can opt for the hassle-free opening of your Demat account from the Motilal Oswal and gain profit like me. So happy investing at Motilal Oswal.